Is this market dip just a speed bump, or the start of something bigger? Wharton's Jeremy Siegel weighs in on the latest market jitters, strong earnings, and why he's still optimistic despite headline risks. If inflation does start to heat up, will the Fed's next move be enough to keep the rally alive?
Rather than Warsh, he is not seen as dovish for Fed chair, and I think that kind of discouraged the market maybe a little bit. Continuing claims, boy, did take a jump. Really, we have the situation, they're not firing, but they're not hiring. And so, how do you deal with that situation? And then, of course, we've had a couple of tepid Treasury auctions today. The 30-year, 10-year wasn't great yesterday. And after this big run, I mean, it wouldn't be surprising to see with those news items some sort of a back down here.
Is it the pause that refreshes? Do you think it's one of those dips that's going to be bought?
Yeah, I think it is. Because the earnings are really coming in so well, and the guidance is coming in really well. Given the upcoming tariffs, I mean, they're beginning to be able to specify how much the tariffs will cost, and that quantifiable amount, I think, is doable for most firms, to say the least. Now, Trump announced new tariffs, but he also sort of blew this hole through the tariffs. It's saying, to the chip manufacturers, start building something here, and you won't have any tariff. Of course, you showed at the top of the hour what's happening in the chip companies, and particularly Apple. I mean, I think that was a really a big positive surprise. I think that continues to show real flexibility by the Trump administration about these tariffs. Basically, you come to the table, you're going to get a good deal. Those that don't, will be put on those tariffs. But most are coming and getting deals.
Sounds like you would agree with what UBS is suggesting today, Professor, where they say the fundamentals look to keep the market supported despite the tariff impacts. Our base case remains, they say, that the U.S. effective tariff rate will settle at around 15%, enough to weigh on growth and lift inflation, but not enough to derail the U.S. economy or the equity rally. That sounds pretty much like it melds with your view.
Yeah, that exactly. I mean, it will slow down inflation now. Most are, it's going to start showing up, but, it's going to be in the 3% range. And, Waller and Bowman, others, have urged Powell to say, listen, we've got to see through these tariffs. This is a one-time tax increase. Don't treat it as, too much demand driving those prices upward. That's, obviously Trump wants someone that represents that view. If that view gets more pervasive on the Fed, then we should see those rates go down, because we do have inversion of the curve. I look at the Fed funds versus the 10-year, and Fed funds at 4.4, and 10-year at 4.2, does give us room to move down there. And
I feel like
the markets